After we have prepared the adjusted trial balance, we will prepare the financial reports. So all of the information in the financial reports will be collected directly from the adjusted trial balance. So there are three main financial reports. The income statement to show the outcome of the activities that the organization conducted within the accounting period. And then there's the owner's equity statement, which will show the changes to the owner's equity due to the profit or loss gained from the activities. And finally, the balance sheet will show the cash, the position, the position of the assets and liabilities of the business. Okay. So right, this on the left side is the adjusted trial balance that has been prepared after the adjustments have been done. All right. So for the income statement to be prepared, all of the revenue and the expenses accounts from the adjusted trial balance will be entered into the income statement. Okay, so the first one will be the first part, or the top part of the income statement will be the revenue. Okay, so revenue from the adjusted trial balance, we found the revenue from the service revenue here, 10,600 credit balance. We put it here. Okay, and then there's no other revenues. And then we will list all of the expenses. Okay, so all of the expenses can be found from here: salaries and wages expenses, supplies expenses, rent expenses, insurance expense, interest expense, depreciation expense. All of this will be entered into the income statement, listed under expenses over here. Okay, on the rightmost column, it will be we will show the total of the revenue, and we will show the total of the expenses. Okay, and this will be the second column from the right will be the individual amount of the expenses. And then we have the total revenue, we have the total expense, and when we minus them together, total revenue minus total expenses, we will get the remaining balance. This is called the net income. Okay, revenues minus expense is the profit, or in other words, net income. Okay, and then from the next statement, the next report that we will produce is the owner's equity statement for the month ended October 31st, 2017. So in this case, Pioneer Advertising is has just started business in October. Therefore, the owner's capital is 0 on 1st of October, and then we add the investments 10,000, which is a movement from the previous owner's capital, which started off with being 0. But when owner makes investment of 10,000, it comes into there, and then we add net income. Okay, net income from income statement that we have calculated here is inserted here. Okay, so owner's equity started with 0 plus investment, and then plus the net income obtained from the activities that the organization has entered into during the month of October. And then we minus the owner's drawing coming from here. Okay, owner's drawing, we minus owner's drawing because the owner has taken out some of his investment, $500. And after deducting drawings, we have a balance of 12,360. That's the owner's capital as at 31st of October. Okay. And then we will produce the balance sheet. Balance sheet will show the current standing of all the assets and liabilities. So on the asset side, okay, the top part is the asset, the asset. So we will take all of the asset accounts from the adjusted trial balance. We have cash, we have accounts receivable, supplies, prepaid insurance, equipment, and also the contra account to equipment, which shows the accumulated depreciation of the equipment. So we put them here: cash, accounts receivable, supplies, prepaid insurance, and we put on the right side, and then we put equipment less the accumulated depreciation for equipment. The book value of equipment is 4,960. So we plus all of these together, we get the total assets of 21,910. Okay, that's on one side of the balance sheet. The other side of the balance sheet, the bottom side, will be liabilities and owner's equity. Okay, so if you can see from the balance sheet actually summarizes all of the accounting equation. So the accounting equation, if you can recall, it's assets equals liability and owner's equity. So on top here is the asset, and the bottom here will be the liabilities and owner's equity. So for the liabilities, we look back at the adjusted trial balance. We look back at the adjusted trial balance. We found these as the liabilities: notes payable, accounts payable, unearned service revenue, salaries and wages payable, and interest payable. All these are the liabilities. So we put them here. So we get a total liability of 9,550. And then we put in the owner's equity. So owner's equity is the owner's capital that comes from the previous statement, that comes from owner's equity statement. So the ending balance of the owner's capital at 31st October is 12,360. The same figure we put in here, okay, on the owner's equity, owner's capital. So when we add total liabilities and total and owner's capital, we will get 21,920, which is the total liabilities and owner's equity. This should be the same as the total asset. This should be equal to the total asset. Okay.